Hello, everyone. Welcome to another episode of Bitcoin Analytica. This is your host, Joe Saz, and today we're going to briefly talk about the pump action we had earlier and see what this really means for the bigger picture. Sure, you could tell by my voice that I'm not really impressed by this whole thing right now. I mean, this is a pretty. Let's just get your screen share right away and get talking about it. All right. So we're on a 30-minute right now. And our pump back here on August 29th, just over a week ago, we had a vertical move out of a low range bottom grind of 25,888. Let's just say 25,800, give or take. Obviously, we were grinding a bit higher, a bit lower at times, but a bit higher than where we are now is the point. And we pumped up from there vertically to 28,000. We topped out, got some buy signals, and then fell through the floor. Very unfortunate. And what's interesting about this run is we have come up again. We basically have a very static horizontal line here of tapped out resistance. And we have sell signals. That's not really good to me. I don't like the fact that we have like this perfect sell wall up here, something that's stopping buyers from going any like an inch further. And not to mention, we back on this 30-minute, when we were over here, when we crashed after this failed pump and to maintain that range or anywhere near it, we came back, fell through the floor, and have consolidated on average in this period of time lower, as you can see, than we were up over here. So this is really unfortunate for now. I think it's Friday tomorrow. Friday is the weekly candle print before the weekend. A lot of people do care about how the weekly looks. So it's possible that we get some fuckery tomorrow. This isn't quite it. This happened earlier on today, so if anything, I would think retrace, but yeah, I'm just not really pleased with this. We came up to a much lower point than we did up here. We got signals. I guess you could say, yeah, we had some signals over here and over here. So this isn't that abnormal. That's kind of the best counter argument I see on the page here. But I'm still not a fan of what we have going on. I mean, we spent way too long down here and spent most of our time probably at around an average of somewhere in the 25,000s as opposed to somewhere in the low 26,000s, mid to high 25s. So this is not, I'm still bullish. I still like the trajectory overall. But I just don't like how we're grinding down here. I think it's really it has the potential to cause a sell-off. It certainly does. And a sell-off is what will break these walls down here. And I really don't want to see that happen. So let's see. Moving on. Oh shit. Yep, we got to see a me gap. I bet you Friday fuckery is gonna fill that thing. Damn. Tough to be optimistic right now. I think we're coming right back down tomorrow. Death cross in a few days. A lot of neutral stuff, bullish engulfing on the daily, neutral RSI, well below the 200-day, floating well below the 200-day for about 2 weeks now. Death cross of the short long-term, intermediate long-term, potentially happening in a couple weeks. So things are looking a little funky. I mean, we could get bearish. I just think it would be very interesting for the overall scene regarding price action now going into the halving, which is like 7-8 months from now. So I'm definitely, it gives us a lot to think about. We'll have to give it some time. Nothing much on silver, double death cross of the short intermediate, short long term. So maybe this is just some little market discovery thing that we have going on with wider market influence, things that are far more macroeconomically relevant, bricks, and petrodollar type stuff, and Russia and China and who knows what else, right? The particularly though, the loss in faith of the strength of the US dollar. I think there was like tons and tons of, maybe like billions of dollars of US treasuries sold by China, maybe something like that in the past couple of days. So I think the lack of faith in the US dollar is growing, and it's causing people to seek alternatives, countries and so forth, to seek alternatives, alliances. So I'm a little, I think the market might be acting widely in a similar way. But I still think that we should be entering the halving around this price. I think we should have gone higher, above 40,000 probably, and then gone into the halving at somewhere like 30. Right now, what it looks more like is we're going to go up, we've gone up to 32 or something thousand as a high, and we're going to walk into the halving closer to 20. So that's just kind of why I don't like this range, because it's really putting some lower targets back on the map. And I would much rather be higher and walk into the halving higher and set us up for probably a 3-month post halving bull market that shoots up from 30,000 to 200, as opposed to from 16 to 20 up to 120 or something like that. It just I just think that the setup for the halving and this bull market right after is getting interesting right now. So all right, everyone, I hope you all have a fantastic night. Hope everyone's being strong and smart and everything beautiful. Take care, everyone, and I'll be seeing you guys tomorrow. All right, peace.